What's good, traders? Welcome to day 15 of the bootcamp. Today we're going to be talking about Fibonacci retracement. Guys, I heard your messages on the last video, and yes, I did rush into this, but today we're going to go fully in depth on this tool and how we can use it to get best entries ever in the markets. Okay, now just a disclaimer, you cannot use this by itself. Okay, you can't trade based on these levels because I have told you so. You have to make sure this aligns with your analysis. So if it doesn't align with your analysis, you will not be able to have good entries, okay? And so because of that, I need to make sure that you guys understand that do not use it by yourself or by itself, sorry. And also make sure it lines up with your analysis and your technical analysis, because if it doesn't, what's going to happen is you're going to force entries. And because this is kind of like an early entry kind of model, you're going to hit a load of losses. Okay, so for me personally, it took me like around 6 months to kind of get the full adjustment of this. But guys, after this video, you'll probably understand it completely, because I'm going to break down everything and even the things that other people have spoken about. And there's things that I've realized by myself that I'm going to input into this video. So don't worry, by the end of this video, you're going to cut all those 6 months that took me to learn, and I'm going to give it to you all within the next however minutes this video is, okay? So with regards to Fibonacci retracement, what we need to first understand is, what is a retracement? What does retracement mean? And how can we identify retracements? Because without identifying retracements, we're not going to actually be able to use this tool appropriately. So let's say we understand there are two motions of the market, right? We have an uptrend and we have a downtrend, right? So this is the uptrend, this is the downtrend, okay? Now, when we are looking at the market, we have this, when it comes to uptrends, we have this upper push, which creates a low and a high, okay? And then we have something called a downwards push, which is called a retracement. This area right here, guys, is called the retracement, this area right here. Now, 9 times out of 10, guys, when you are trading this, it's going to be very, very difficult to find this retracement, okay? Because every time frame shows you different retracements. For example, the 50-minute time frame will show you a retracement, and then the 4-hour will show you that we're continuing to go down. So which time frame do we use to identify retracements? For me personally, we use the higher time frames. The higher time frame is what's going to help you find out the strongest retracements. Okay, so for example, if the market is making its way up, right, like this, and then it starts to make its way down like this, okay, we then get to see this leg, which is currently not the downtrend, because remember, we're still going up, right? The only way this could be a downtrend is if this level right here gets broken, which it didn't, okay? And so therefore, this is the retracement, okay? So because of that, we now know that this is retracement. Now, imagine if price is, let's say, here, right? We need to now identify where the retracement will stop, right? We want to know this area as quick as possible, because we want to hop on this wave, right? We want to hop on this uptrend wave. So the best place to place a buy is at these levels, right? So in order for us to get an entry at these levels, we need to predetermine where price is going to get to, okay? So that's where the Fibonacci tool comes out, okay? And to find the Fibonacci tool is 1, 2, 3 down from the left, and then it's the first one, Fib retracement, okay? You click on it, and at first, it's not gonna look like this. So guys, what I advise you is screenshot this and take down these numbers, tick these boxes, and I'll just show you the screenshot of this one as well. Screenshot this and make sure it's the exact same as what I have, okay? Now, you can change the colors around. I like to keep it black and then gold for my take profit areas. So these two are take profit zones. You can keep it whatever color you like. And what we like to do when it comes to the Fibonacci tool, we'll click on it and then we'll, within the leg, so the leg that goes up, for example, this leg here, right? We're not going to use the retracement leg because this retracement leg is still forming, right? So what we'll do is we use the leg that's over here and we go from the bottom of the leg to the top of the leg, okay? And then what you'll see is if we could just extend it, but you can actually see that, and I free drew this, right? You can see that price came down to the 78.6 extension, reversed, and then went right to our take profit 2. Okay, so this is take profit 1 and take profit 2. This is why this tool is so powerful, because when we're on an uptrend, we already have our targets here, which if it lines with a round psychological number, even perfect. And also we get to see the entry. Okay, and similarly is the same thing for the downtrend, just the opposite. So we identify one leg of the downtrend, so this leg right here, for example. We then see that price is making its way up, okay, i.e. starting to retrace. Okay, so what we do is when we start to see that, we get our fib tool out, and this time when it's a downtrend, we go from the highest point of the leg to the lowest point of the leg of the downtrend. And then we see that this time price went to the 50 extension, reversed, and then went all the way, smashing TP1 and TP2. Okay, so that's pretty much it when it comes to the Fibonacci tool. There's a few notes that I want you guys to note down. Okay, which I'm just gonna keep like this. A few notes. So number one, okay, make sure you first identify the trend and the retracement. Okay, if you guys do not identify the trend or the retracement, right, like how we did here, if you do not do that, what's going to happen is you're going to be on the opposite side of the trend, and you're going to be looking at fib levels on the opposite side, which if everyone's buying and you're selling, you are going to lose. Likewise, if I am selling, or this Fibonacci is telling you to sell, but the whole market is going up, you're going to lose, right? So do not make that mistake. First, identify the trend and then find the retracement. If it's not retracing, you can't use this tool. But if it is retracing, you can use this tool, okay? Then next, use the fib levels on a high time frame. So for me personally, anything above the 1 hour is perfectly fine. If I'm going to use the 15 minutes, I have to make sure that the 15 minutes is either, i.e. corresponding with the rest of the time frames, or I'm basically scalping at that point, okay? But I don't really like using the 15 minutes because a lot of fake outs, a lot of times where fib levels do not get respected. Therefore, I'm using anything above 1 hour, okay? So anything above 1 hour, totally fine. I like using the 4 hours. The 4 hours and 1 hour is one of the best time frames to use it. But if you guys use it on the 15 minutes or the 30 minutes, 45 minutes, 2 hours, totally fine. I like to use it on the 1 hour and 4 hours. Those are my two favorable time frames to use it. I will not use it on the daily because it's going to take forever. The daily is more for swing traders. I'm a day trader, so I'm going to use it 1 hour to 4 hours, okay? Next keynote, guys, right? And make sure you're writing these keynotes down when you are learning Fibonacci, because you need to have this on the wall or whatever. Make sure you have it in front of you so you don't make these mistakes. The next one is make sure that the fib levels are corresponding with your analysis. Okay, make sure that this Fibonacci levels are backing with your analysis. I can't stress this enough, guys. You cannot use this tool by itself. It's not a magical tool. It's not something that's just going to suddenly turn you profitable. This is a tool to use as a secondary confluence, not a primary. Your primary confluences are price action, like candlestick formations. It's your trend bias. It's your key levels, right? The secondary will be indicators, and this is just another indicator that we actually use to understand where the retracement will end and where our targets are, okay? So please, guys, do not use it by itself, because I used to try and use it by myself thinking that, oh, this is so easy. And then what happens is I lose because I was using it by myself and I didn't actually realize that there was other levels on the fib, or price just did not respect it, or it just wasn't the right place to use the fib, basically, okay? And the last point is make sure you identify a leg before placing the fib tool, okay? Guys, make sure you can identify a singular leg. You cannot, and I stress, you cannot use this fib when there's like 3 legs, right? 1, 2 legs, right? You can't use the fib like that because it's just not going to be respected. You got to find a specific leg. It could be this leg or this leg. If you want a downtrend, the downtrend legs, right? Retracements, legs, okay? So likewise, uptrend, legs. These two are the legs, and I'll actually highlight it in a different color so you can actually see, okay? Legs, retracement, legs, and obviously red for retracement, okay? So those are my keynotes, guys. Please, please, please take notes of this. Do not let this fly over your head and practice, okay? Practice using the fib tool because it's like trying out a new sport for the first time. Even though you know how the markets are, even though you know everything, is like trying out something new, right? Like an example that I can give you guys is like, imagine you're playing football and you got these new football boots on. You know how to play the football, you know how to pass the ball, but when you got new boots on, it's something completely new. So what I recommend is please just practice before you actually go on the playing field and you actually go and place trades using just these tools, right? Practice it, let it align with your analysis. If it doesn't align with your analysis, it's totally fine. You don't have to use it. I don't actually use the Fibonacci tool all the time. I just sometimes use it to make, if in case I'm an uptrend or downtrend and I want to figure out levels, or if I want to figure out, does this make sense? Because there are a load of Fibonacci traders out there that will trade like this, okay? But that is pretty much it. I'm going to remove all of this, guys, now. Hopefully you guys have taken a screenshot. If not, rewind back the video, take a screenshot, take notes, whatever. And I'm going to now show you guys a way that you can use this tool. Okay, so first thing first, before I show you, let's get in some supply and demand levels. Okay, our key levels out here. Okay, so for example, let's first figure out the trend. So the trend, okay, as you can see, the trend is, we got highs, lows, right? So our trend is basically a downtrend, okay? And now to make it even easier for us, let's just go on the 4 hours. And you can actually see clear as day, right? And we're not going to go all the way back here. There's no point, right? We can actually see highs, lows, highs, lows, highs, lows, highs, lows. And then we're kind of having this now counter trend where price is slowly trying to, maybe it could reverse, or maybe it's just doing another retracement, right? But let's look at this and see, okay, cool. Let's look at this leg right here. So this is a leg, guys, okay? As you can see, this is a leg, okay? Another leg is here. This is another leg, okay? Now we can actually scale in and see all the internal legs in this, but on the 4 hours, right, you can see those are the legs, okay? And then we've got another leg here, okay? Now, those are the legs, so the retracements are this. This is the retracement, okay? Now, obviously on the 4 hours, we're seeing that, but now let's scale into the 1 hour, because the best price, I would say, for Fibonacci's is the 1 hour, especially if you're going to find entries on the 15 minutes. Try and go for the 1 hour. It's like a sweet spot, guys. It's amazing, okay? So let's look at, for example, this right here, okay? So I'm just going to clear out this so you can actually see. So you can see that right now, currently on the 4 hours, we saw that this was a leg, okay? And you can see that clear as day, we have a high right here and a low right here. Okay, so what we're gonna do is we're gonna get a fib level out. I'm gonna go from the high, and with Fibonacci, I like to use wicks. I like to include the wicks as well because that's the whole time. Okay, so we use the wicks, high, and then to low. Okay, again, I'm just gonna highlight this so you guys can see this wick up here, this wick down here. Okay, these two wicks. We go down. Okay, cool. Now we see price come up. Okay, now look at the levels. Okay, now to make it even better, what we're going to do is we're going to just line it up with our 4 hour support and resistance areas. Okay, so let's line it up. Okay, so we already know that we have some sort of level right here, which is 0.7, around psychological number would be around 0.77, round right there, 0.77. is not really the best round number. Let's look at the 50 extension. The 50 extension, oh, perfect, 1.08, right? Nothing can beat 1.08. So let's draw that out. Coordinates 1.08. Now, right, let's draw area around here. Okay, and you can actually see that we do have some sort of area of interest over here. Okay, let's look at our 61.8 extension. Okay, cool. 61.8 is around 0.84. Not really the best. I would say 1.085 would have been the best round psychological number. As you can see, it's not really the best. Well, let's see the 78.6 extension. Okay, 1.088. Still not the best. So I would say the 50 and the 30 extension are the areas that we should look at. Okay, so this is the area, again, based on price action. That's what we're looking at. Okay, so based on price action, we can see that price has obviously clearly now broken structure, which you can see it has broken structure. If we use this body right here, remember yesterday I told you guys, when it comes to break of structures, please use the body. When it comes to wicks, you only use it for the Fibonacci, okay? Even with support and resistance, try and get it within the bodies. It can accept the wicks, but the bodies are the better reversals, okay? For example, here, nice body, but the wicks are still important, but it's not as strong as the bodies, okay? So we got this, and then now we scale into the 1 hour. Okay, you can see that price nicely goes to the 50 extension, reverses exactly at the 50 extension, right? Comes down, right? And not only does it come down, we can actually see if we scale into the 15 minutes now, obviously we're looking for entries, right? We actually have a lovely price come down, okay? Boom, comes down, retest. Okay, still hasn't broken structure yet, but now it has broken structure. Once it's broken structure, clearly a retest at the 50. Okay, so the 50 extension is very, very nice when it comes to us entering. Okay, and you can clearly see that we had that breaker structure. Okay, let me just draw this out for you. We had the break of internal structure, and in reality, guys, we can actually clearly see, and I know this is probably very difficult to see, but you can actually see, if I scale in quite nicely, you can actually see we actually created structure right here. So technically the break of structure happened within this level right here. If you guys can see, the break of structure happened within this area. So if I draw another area right here, right? What do we like to see when there's a break structure? We like to see the break of structure, which we see, and then the retest, okay? Break of structure and then the retest. Okay, if I just remove this quickly, if I just hide this, you'll see we need the break of structure and the retest, and that's what we have. Okay, the break of structure retest, we would enter at this candlestick right here. So we'll go for a sell. Stop loss, obviously above the high. Okay, now take profit, guys. Take profit. We would go TP1, which is, we'll go back on the 1 hour. TP1, which is all the way down to here. Okay, now just TP1 as a whole is a 1:9 risk to reward ratio. Guys, this is the best trade you're ever going to take in your whole trading career. Why? Because you followed simple instruction. Obviously, when you trade with this, you will have better analysis. You won't have terrible analysis like this. You would have better analysis, and also you would already know where price action is going. So this is just helping you increase your entry point, okay? Because usually what happens is when you're coming to trade, okay, which is totally fine, what you would do is you would wait for price to create some internal structure, okay? So when, for example, here you see that price is starting to create internal structure, and then what you would do is you would wait, okay, internal structure has broken, which is here, right? And then you'll wait for that slowly retracement, which will be here. And then you're like kind of waiting for price. You'll probably sell around here, but then you've just missed out all of this, right? And most of the time, even if you did sell here, your stop loss has to be all the way up here, which is too high, right? And then let's say you are targeting here, which is a 1 to 1.6, right? But still very, very difficult, okay? Now, a key tip, guys, if you want to be a bit more, this is a bit more aggressive, but if you want to be a bit more reserved, right, I would advise you to always have your stop loss above the next fib level. This is something that just helped me when it came to trade, but still, guys, it's still a 1-to-4 risk to ratio is amazing, okay? But, and as you can see, we have smashed take profit right here. Amazing take profit, okay? Now we can do this again within this leg. You can see that, okay, let's have a look at another. We have another one right here, okay? And this is live, guys. Right now it's happening, right? And you can, everyone already knows Euro USD, we're going down, right? So let's go. Let's get the Fibonacci on here, okay? So Fibonacci retracement, boom to boom, again. Again, from the high of the wick to the low of the wick, okay? Making sure you include the highs and the lows, okay? Now, let me just get rid of this. We will look for, okay, cool. Price broke structure here. This is where we had that break of structure. Okay, so when we see break of structure, let's draw an area right here. We would expect price to come to the 61.8. Okay, cool. 61.8. Remember this, guys, okay? Now, also, what do we see at 61.8? We have a round psychological number, 1.06. Guys, amazing, right? Amazing. Okay, cool. 1.06. Interesting. Okay, I'm going to scale into the 15 minutes. Okay, 15 minutes, we can see, even though, yes, price is coming up, right? We know that that is a nice entry point. So what I would do is I would sell stop loss above here, and I'll target all the way down to my first TP. First TP is always the safe zone. Is not too aggressive, it's not too less. Let's go on the 1 hour, have a look at the trade. You can see that, okay, cool, price might be testing out the sellers over here. It wasn't pretty strong, so we might want to see another retest at this level. Totally fine. Okay, what happens? We'll wait for it to trigger us. Once it's triggered it, we will go down for the sell. Okay, simple as that, guys. Very, very simple tool to use. And honestly, guys, it transformed my entry process when it came to the markets, because now I have another confluence that helps me enter the market, and it just makes me more confident, right? When it comes to trading, what you need is confidence, right? So if you're trading and you don't have confidence, maybe adding this tool might be able to boost your confidence to place that trade, to place a better entry, and to have better positions in the market. Because I know a lot of us, we always enter, and especially if you're a new trader, you're always going to enter last in the market. You don't want to enter last, you want to enter as early as possible so you can get the full move. If you don't want the full move and you have, you're comfortable with your trading analysis, you don't need to use this, but still you can use this to see where targets are. Sorry about that, guys. So you can still use it for your targets. So even though, yes, for example, here, we don't actually have any targets right here since, like, I don't know, for ages, right? So we don't actually have any targets. So best thing to do is use the fib tool to find targets. So even if, yes, you entered all the way down here, right? Keep your stop loss above here, of course, but you can have a nice little target of, 1.04500. Wow, another round psychological number. Guys, this is like art for me, okay? And it's so amazing how trading is, because once you start to realize how things work, you'll start to realize that everything works in its favor, right? A round psychological level at a TP, right? Another round psychological level at TP2, 1.04. Well, what we know about trading is when price goes from 1.06, it's definitely going to go to 1.05, and it's definitely going to go to 1.04. So amazing. Every psychological number is fixated with, is compared to our Fibonacci levels, which is agreed. And then if we get our moving averages, right, we will see that moving averages also, right, it respects, right? Most likely we'll see probably a price, even if price does go up, right, most likely it might just crash down because it's already tested the zone. But even if it did, we will have a reserve. If I see price to start to crash down, then we'll keep our stop loss above this moving average and we'll enter. Okay, guys, trading becomes so much more easier once you use the markets like this and you use the tools that the market gives us. One thing I would say is using price action, using candlesticks, using what the market gives us first, then overlaying it with the Fibonacci. For example, we don't need the Fibonacci tool to identify an entry point, right? We don't need it. We would only use the Fibonacci tool if we want a confirmation of an entry point. So for example, right here, I already know that price is most likely going to tap into 1.06, right? It didn't get to tap into 1.05, which if I just get a line right here, 1.05, it didn't quite, I think it did touch actually, it did touch 1.05, but it rebounded off. So most likely price is going to go from one level to the next, which is doing it, right? Price is going to go up here, all right? And moving averages are going to come up like this. Moving average is going to come up, this moving average is going to come up like this, price is going to come up, and then when it crashes down, right, the moving averages are just going to do this right here, and then it's just going to continue its downtrend. Okay, that's what the analysis I have, very similar to like here where where the moving average almost crossed over, which it didn't, right? So most likely we'll have the same maneuver here. So guys, this is just another prediction in the markets. Markets can easily though come and scale up and do this and then break. But again, we still have predictions. We still have entry points for that. Why? Because we wait for price to break structure, right? Once it's breaking the structure, we wait for it to retest, right? Once we wait for it to retest, we enter, right? And what does it give us? It also gives us a nice inverse of a head and shoulder right here, right? This is what it would give us. Okay, so obviously I'm just giving you examples of different formations that we have in the markets. It doesn't have to be exactly this, but it's always good to be prepared, and Fibonacci level helps us when it comes to preparing our entry points. If you guys are struggling with entry points, this is the go-to video for you. If you guys are struggling to have a target, this is also another go-to tool to use. If you guys have good entries but your stop loss is too wide, this is also another tool that you can use for yourself to give yourself that maximum profit level and the minimum of stop loss level, so that you can actually utilize the markets and not actually be a victim of the markets where you keep getting stopped out because your stop loss is too terrible or too low or too tight and your targets are too long, and you're fading in the markets because of that. So this tool is definitely a tool that can change the game for real for you and make you feel great and confident in the markets, guys. So that's pretty much it when it comes to Fibonacci retracement tool. Guys, I hope you are enjoying this bootcamp. We're on day 15. Amazing. 15 days in the bootcamp, and we've learned so much already, and I've got so much more to show you guys. For those who are not subscribed yet, please subscribe. For you guys that are still confused with Fibonacci retracement tool, comment it down below or hop on the Discord, ask me questions. I'm so happy that people are coming onto the Discord server and privately asking me questions. It's really good for the community, because there's some people out here that actually generally are don't want to ask questions, but they didn't even know that this is something they needed to ask. So when you do it, it not helps just you, it helps other people as well. So please make sure you do that. And guys, make sure you like this video and turn the bell notification on so that you are always ready and prepared for the new bootcamp lesson that we're giving you. And if you're enjoying, obviously give that thumbs up, and I'll see you guys in tomorrow's bootcamp. See you later, guys.